Guys, can you please mute your mics if you're hopping on right now? Perfect, perfect. Okay, dope. Now let's run this, guys. Let's actually run this call pretty well. So, all right, guys, I'm going to talk about a trading strategies call. And this is going to be a fast start training that every single person can use when they're first getting started in the business, right? I broke this down into slideshows to help out every single person kind of operate at the same level, right? Let's first talk about trader psychology. And I made this PowerPoint because trading psychology makes up 80% of the entire market, while 20% actually comes in technical. So why I talk about trader psychology when you're first coming into this business, right? The big reason why people fail at trading is because of a psychological standpoint. The market runs off of two different factors, fear or greed, right? People literally that their emotions get ahead of them. So emotional intelligence is key. Understanding whether you're emotional or not when you're going into a trade, whether you're impulsive or not, is such a big factor because most people, 80% of people make their decisions emotionally, right? Human beings, we are emotional creatures. We are creatures of habit. So everything that it is that we do in an emotional standpoint. So think of it like this, guys. The market is 80% psychological and 20% technical. So the market is meant to make you lose because most people do not know how to control their emotions. So understand, trader psychology is going against complete human emotion. And those two emotions are fear and greed. The reason people lose is because they either get super fearful or super greedy. So what happens, guys? When someone loses 3 times in a row in a trade, they start to get fearful of the market. Basically human psychology runs in threes. So if you lose 3 times in a row, what happens is people tend to get scared. They start to second guess their own trading analysis. They start to second guess their plan. Stay consistent with your plan even if you get trading wrong 3 times in a row. That is not going to be necessarily a core factor that your plan might suck. It just might mean that you have really bad chances. What will be a really good indicator whether you can trade or cannot trade is if you're in that trade 10 times in a row and you go into 10 trades in a row and they are all failures. That is going to give you a huge statement on whether or not you're doing something right or wrong, right? And number 2 is greed. Greed is probably the biggest thing when it comes to trading. Every single person has been through this. They go to Vegas, they gamble, make a lot of money and lose it all. They go into a trade, they let it hit an amazing amount of profits and then don't have it hit their spot profits, don't have a stop loss in the stop profit zone, or let it run all the way up. I think every single person here can relate on the call. We've had trades that we've run up to the point where it was literally like we were like $100, $200 in profit, 50 pips in profit, 30 pips in profit, 100 pips in profit, and we were getting so greedy that we just wanted a little bit more. We wanted 10 pips more. We wanted $5 or $20 more. We wanted another $100 more. Understand, guys, you're not going to get rich off of one trade. That's the reality of it. So getting super greedy will kill you in the market, right? Think of it like this. Pigs get fat, pigs get slaughtered, right? So every single pig in the market, or just pigs in general, get slaughtered. So don't get too super greedy. The third thing we want to talk about is having a solid trading plan. So understand, guys, professionals have a trading plan. They treat this not like a hobby, but an actual profession. They track down their numbers like business owners do. How are you going to hold yourself accountable or know where it is that you're going, or if you even had any progress if you do not track your numbers? Have a solid trading plan and system. Is your goal to catch 50 pips a day? 50 pips a day gets the 9 to 5 away, right? 50 pips a day is 250 pips a week. 250 pips a week is 1,000 pips a month. 1,000 pips a month will set you up financially free for the rest of your life. You never have to go out there and work a job again, right? But understand, guys, that is not done easily. That's not done overnight, and that's not done without a system, right? So systems are meant to what? Save yourself time, energy, and money. So we need systems in our business, and we have a good solid system that I recommend to every single person here. Now, what I want to talk about first is if you go on the Life by Design IML Facebook group, every single person here has a system. And I've given people 2 different types of strategies what they're doing when they're first trading. The first strategy is what? If you want to go out there and be conservative, you want to risk 2 to 5% of your account and actually trade with a system like this. Let me see if I can load this up, guys. You're going to want to trade with a system just like this, guys. So you're going to have access to the Life by Design IML group once you're in our IML group. Now, the second you get over here, you're going to go under files. Once you go under files, you're going to look down and look at the Life by Design trading plan. Once you go here, this will be able to help you track down your numbers. You're going to download this, right? Open. This is going to be your trading plan, and this is what's going to help you guys out massively. Here, you will be able to put the exact balance in your account, what your daily percentage growth will be, what your take profits will be. Let's say if you're aiming for 50 pips a day, and write down your personal goals, daily, weekly, and monthly personal goals with a 30-day earning calculator, along with a binary strategy and additional tips when you're trading. So let's say, guys, if I'm starting my account off with $1,000, right, $1,000, the system will automatically calculate what I want. So let's say daily growth. Let's say it's my goal to add 5 or 3% a day. Let's say 5% a day. Most hedge fund traders are looking for 3 to 5% a month, guys. So 5% a day is what the average, that's a very, very good day for a regular day trader. So let's say if I'm looking for 5% a day, my daily profit goal would be right here, located here. And let's say I'm aiming for 50 pips a day. Now you have to account the spread. The spread takes 2 pips from 50 pips. So you're looking for 48 pips a day, right? Now, let's say this is, you're looking for 48 pips. So just add an extra 2 on that. Your stop loss from 50 pip, you want to risk 1 to 3 when you're trading. So it's going to be a 15 to 20 pip stop loss. Now, let's say, guys, if I'm over here, you know, I have $1,000 in my account. You know, my first month, my first day, you know, I'm looking for a $50 total daily profit goal, right? And I do this every single trading day. Now, understand, guys, trading is like fishing. You're not going to look for trades that are not there, but this is going to help you accountable when you're trading in the market, right? I wish somebody had given me this when I first started trading. And the reason I say this is because most people, they do not have a trading plan. They go into the market and just try to make money. Guys, you not having a plan is like a construction worker trying to build the Empire State Building, just saying, well, you know what? Fuck it. Let's just build a building. We don't need a plan. You know, so it's impossible. It's an ungodly impossible to do that. That's like somebody trying to go into like basically trying to build an airplane and not have the instructions for it. It's like somebody trying to, you know, basically do anything in life with no instructions. It's impossible. You would never hop on a plane that had no end destination. So what are your goals? Right. So after 60 trading days, that $1,000 account with a 5% growth, guys, would be $17,000 in the account. And you could do this within a 2 to 3 month period and make $17,000 trading. I showed this to a couple people and they've actually been able to do this, right? Killed me. Definitely going to use that. No, it's key, right? It's so freaking key. So guys, understand this. You all have access to this right now. If you're going to have a trading plan, have this as your main number 1 trading plan to track down your numbers. Number 2, if you're going to go out there and try to trade by yourself, if you're going to go out there and decide to be a little bit more risky, do not use the main account that you're going to trade. This main account, you should have 2 accounts, right? 2 major accounts. 1 account that you're going to manage, take swipe trades with. You should all be writing this down. IMOTV account, IMOTV with. You're going to actually also take the daily swing trades with it. And maybe when you're comfortable, your 3rd or 4th month, harmonic scanner trades. Now, your second account will be a smaller account. Your first account should have more than $300 or $200, right? 100, let's say 200 to $300. Your second account should be your smaller account. And this is your play account. This is your learning account. Most people will blow this account. If you're blowing an account, welcome to trading, right? Most average traders, before they become really good, will blow at least 5 accounts, guys. So if you're blowing accounts, don't worry. I mean, it's rather for you to blow 50 or $100 than, you know, obviously blowing like $20,000, right? That's what people in day trading do. They blow like $1,000, right? So we have here, your first account will be your managed account. This is where you're going to, you know, obviously, you know, have a trading plan. This account will have a trading plan. This account, you'll have swipe trades marked down. You're going to mark this up every single day. And this is also a nice account to also showcase what? Results. You want to showcase results to people, you can show them this account and you'll be like, hey, this is how much I made this month from trading last month. Whether it was 50% profit or 100% profit, this right here will literally help you guys in the long run, right? This will help you so much because everybody's like, yo, I need results. I need something, right? Perfect. This guy said he's at the circus. He still made the call. Your second account will be your smaller account. This account right here is going to be your play account, right? This is where you're going to take your own trades, be a little bit more riskier, right? And this is your learning account, right? Most people need an actual learning account. So this account right here is going to help you with learning. So have one account that you're going to manage with a trading plan. Have another account that you're going to have as your second account. That way you can go out there and actually learn. So real quick, I'm going to put this up. You guys can save that. This is going to be your trading plan. Go out there and access it when you need it. Now, let me talk a little bit about finding your style of trading. So there's multiple different styles of trading, and I think I'm going to talk about the main three. Need help accessing the Life by Design Facebook page. If you need help accessing that, guys, contact your sponsor or your upline, and they'll plug you in immediately. If not, just message me on Facebook, guys. So 3 types of trading styles. There's multiple different types of trading styles, but I'm going to talk about the main 3 that I've come across that have helped me out a lot. Let's talk about scalping. We're going to talk about swing trading and intraday trading. Okay, so why I'm talking about scalping. Scalping is when you're aiming for a goal of anywhere from sometimes 5 to 15 pips, 5 to 20 pips, let's say that, 5 to 20 pips. Now, what I'm saying about scalping is when you're going off of the lower time frames and you're just looking for, a quick 5 to 20 pips. Usually, guys, I don't like to aim for 5. 20 pips is a solid gain, guys. Like I said, 50 pips a day keeps the 9 to 5 away. If you get 20 or 30 pips in the market, you're halfway towards your goal. Understand, guys, most hedge fund traders look for 20 to 30 pips in the market every single day. Now we have swing trading. Swing trading, the average swing trader can range anywhere from 100 to over, 300, 400 plus pips, right? In the market. So let me talk a little bit about swing trading, guys. Swing trading is also risky. It's not necessarily something that a lot of people can do. More hedge funds, though, do swing trade. Now, the reason I'm saying about why I'm talking about swing trading is because in a psychological standpoint, it's a little bit more safer because most people are usually risking less when you're in a swing trade. Your stop losses will range anywhere from 50 to 75 pips when you're swing trading. When you're long-term trading, the swing trade will also be sometimes a week, 2 weeks, maybe 3 weeks when you're into a trade, when you're swing trading. And the third thing I want to talk about is intraday trading, right? This is when you're trading between sessions, right? So what I mean by this is, let's say you're trading London session, New York session, Asian session. Sometimes the gains, this is like the middle between scalping and swing trading, will be anywhere from 30 to 50 pips gains, depending on the pairs that you're trading. Let's say a pair is USD JPY, a GJ will be a little bit more. GU will be a little bit less. GU is very conservative. I like GU. Australian dollar versus US dollar, when you're trading during the US session, will give you 30 to 50 pips every single session, guys. So understand, what kind of trader are you? Most scalpers out there are a little bit more riskier. Scalping associates the average shark, right? Someone that has a shark personality here will usually become a scalper. A swing trader is somebody that's a little bit more conservative, somebody that doesn't like to look at the market a lot, somebody that wants to just go out there, live life a little bit more, and check his trades once in a while. An intraday trader is somebody that is necessarily just looking for that quick setup, is willing to risk and trade about an hour or 2 a day just for the session, and then just get out of the market, right? So find out what kind of person you are, what you resonate with, because this is going to be key into massive, massive success when it comes to trading. Scalping, I think in general, guys, is amazing, but experiment with every single one. And the reason I say this is because you won't know what will work for you, what won't work for you, right? Just like anything in life, you got to experiment. You got to go out there and try new different things. For me, what might work for me might not work for you guys. So experiment. Write this down, guys. Next thing I'm going to talk about is have self-awareness. Strengths and weaknesses. What are your strengths and what are your weaknesses, guys? Self-awareness stems bigger than just trading. self-awareness is probably one of the most key components into becoming massively successful just in general. What are you good at and what are you bad at, right? Understand your strengths and your weaknesses. What is it that you're currently doing when you're entering a trade? Are you acting on impulse or are you acting on fear, right? Have self-awareness when you're getting involved in the market, just because it's going to help you a lot more in the overall spectrum of this business, right? Have another perspective. Look at yourself from a different viewpoint, like an outside viewpoint when you're going into the market, and kind of see what it is you're doing right and what you're doing wrong, right? People that have a self-awareness excel massively when it comes to trading. People will tend to meditate. People will tend to do things that they love, right before, that way they get in a comfortable, positive position when they're getting into the market. So I think I already talked about that. The 3 types of traders, fundamental, write this down. Number 1 is fundamental. Number 2 is technical. And the 3rd is sentimental. So fundamental trading comes down to news breaking. When you're trading news, when you're going out there and doing research behind certain pairs, that's where fundamentals are key. Fundamental trading is huge. Some people will only trade off of straight fundamentals. It's insane. And they can make really good money, especially with stock trading. Some people just off of fundamentals and stock trading, just because they hear about a news release that's about to leak, will buy an immense amount of stock and pump the stock and then get rid of it the second that it hits a certain price. So fundamental trading is number 1, huge. Number 2, technical analysis trading. This is what I'm talking about when we talk about technical analysis. This is like the actual art of marking up charts, right? It's like a math, guys, right? When you're marking up charts, like on TradingView, when we hop on TradingView and I talk about support, resistance, trend lines, all that good stuff, right? That all comes from what? This is technical analysis. This is us marking up charts. This is us, going out there and looking at certain pairs, right, and seeing how they react to in the market. All right, let's look at some certain pairs that we had marked up previously. Wow. It's crazy. We call the sell right here. I'm just looking at this play out. Look at this, guys. Called the buy right here for the breakout. I just love seeing like trades execute. Makes me feel like Nostradamus. All right, let's talk about after trading psychology. It's the 3rd slide we're going to talk about is risk management. So always have an account that you're risking 2 to 5% on. And that's what I talked about, I think, in the beginning, right? Having a main account and a play around account. So 2 to 5% of your account is key. And when you're trading, always have a 1 to 3 risk to reward ratio. Now, what I'm saying by this, guys, and why this is so big is because you can never lose when you have a 1 to 3 risk to reward ratio, right? And I'm going to show you what I mean by this, guys, right now. So when you have a 1 to 3 risk to reward. Oh. Can you guys please mute your mics? Marcus, please mute your mic. Okay, cool. You ought to have a 1 to 3 risk to reward ratio. So 1 second, guys, 1 second. Okay. So what I mean by this, guys, is you're never going to enter the trade if the odds are never for your favor. So in every trade that you enter, let's keep it super simple. Let's say my goal is to catch 50 or 60 pips a day. Very simple. That means with 1 to 3 risk, I'm looking for one trade. On one trade, my goal is to catch 60 pips. And I'm willing to risk 20 pips. I'm willing to risk 20 pips to gain 60 pips. So my risk to reward is 1 to 3. Where people mess up is when their risk to reward is less than 1 to 3. when the risk to reward is 1-to-1 or 1-to-2, people fuck up. Now, what I'm saying by this is like, let's say I get to one trade and my goal is 50 pips and my stop loss is 50 pips too, right? That means I'm on a 1-to-1 risk. I could gain 50 pips or lose 50 pips. That's gambling, straight up gambling. So where you'll always win is the best traders in the world will enter trades that are 1-to-3 to risk, that are high probability trade setups. Trading isn't gambling, right? It's high probability. It's measuring probabilities and risk. So think of it like this. Let's say this is why you will never lose with trading. If you lose with 1-to-3 risk, if you lose 2 out of 3 trades with 1-to-3 risk, you will always be profitable. Understand this, guys, because when I understood this, when I was just getting started with trading, it was crazy. So let's say my first trade, right? My first trade hits stop loss. I lose 20 pips. Second trade, hit stop loss. I lose 20 more pips. But my last and final trade, I have my last opportunity, hits my take profit. I gain 60 pips. I will leave at the end of this trading session with over what? 20 pips in profit. This is why 1-to-3 risk always wins. And if your risk is higher than 1-to-3, you're in even more of a better chance of winning. This is why 1-to-3 risk, 1-to-3, why is this doing that? Risk, okay, dominates. Because look at this, you will always win. You could lose 2 out of 3 trades, and most traders lose 2 out of 3 trades. Guys, you got to understand that most traders are not good. They just understand this math and they understand this risk management. Most traders lose 2 out of 3 trades. Most traders lose 3 out of 4 trades. But because they understand this right here, the shit that I'm telling you, the 1-to-3 risk to reward, this will excel your trading and put you ahead of all of the competition without a shadow of a doubt. With it, for a fact that I know. Before the call is up, call you to go back to the slide about the accounts. All right. Before the call is up. All right. I'm sorry, Kyra. I just saw that. Now, never be over leveraged on one trade. I want to talk about this, guys, because a lot of people will try to get rich off of one trade. It's key. I mean, you have to over leverage when you're trading on one trade. You can't get rich off of one trade. It's like powerful, right? The next thing, risks can be predetermined, but rewards can't be. You see what I'm saying? So what you're risking can always be predetermined, but your rewards won't necessarily always be, gifted to you. So, I mean, take what the market gives you. Don't have a certain goal or have a certain outcome. Have freedom of outcome when you're trading. And the last final thing is probabilities when you're trading, right? A lot of trading is super simple. I'll break it down in every single opportunity call. All we're doing is managing our risk and probabilities. Everything in life is a probability. If I go to school, if I'm going to college, let's say I dropped out, but let's just say I'm going to college. Let's say I'm going to school. I show up for class on time. I hand in all my homework. I'm basically, studying and passing all the tests, being really good with the teacher. I'm going to probably get a really good grade on the class. Now, let's say if I'm not, studying, I'm disrespecting the teacher, I'm failing everything, I'm not showing up, I'm probably going to fail the class. Guys, understand this. This is another crazy probability that I learned. You have a 1 in 580 millionth chance in winning the lottery. A 1 in 580 million chance in winning the lottery. And you have a 1 in 10 chance of becoming financially free when you're opening a business. You have a 1 in 10 chance of being financially free, opening a business, and you have a 1 in 580 million chance of becoming financially free with the lottery. Why do most people play the lottery than they do opening a business? When the business, you have a higher probability, right? Understand, guys, everything in life is a probability. So we're managing our risk and probabilities, and we're looking for confirmations. Now, why I told you guys that story is because a 1 in 10 people, more people would open up a business if they believed in themselves. That's why most people don't actually open up businesses, because they don't believe in themselves. So let's talk about the next thing. what I'm looking for and why probabilities are so key, because we're looking for what? Confirmations. And that's the next slide that I'm looking for. Confirmations when I'm trading, right? I'm going to talk about certain tips and tricks that help me when I'm going into a trade, right? The first thing I'm looking for is the trend. The trend is your friend. Establish whether we're in an uptrend or whether we're in a downtrend, guys. That's so key, because if you don't know what kind of trend we are, you're screwed. You don't ever want to trade against the trend. So right here, what am I trading with? An uptrend, guys, right? This is a solid uptrend. So let's look at the AUD USD. Let's remove all this, remove all indicators. All right, let's get it. Let's get a blank screen in here. Let's see if we can do this. Remove all indicators, remove all drawing tools. We have a flat screen. Nobody knows anything. Okay, cool. So what am I looking at right now?
Yes.
What does this look like?
Money stacks.
Who was that? All right, Joel. Thank you for that. Dope. Okay, so we're on an uptrend currently. Even now, this hasn't broken the last low. It's still creating higher highs and higher lows, right? I think it's gonna obviously in the short term go down, but long term we're on an uptrend. So what are we gonna look for more? Our bias is gonna be more towards buying positions, right? Right now with this trend right here, though, obviously right here, we have a potential of it going a little bit lower and retracing. And I could see it actually retracing a little bit lower because it hit the 61.8 retracement. So it's funny because we actually called a sell here last week when we were looking at this on Sunday. It's insane what the market does. Like it's wild. We actually called a sell. If you guys check the live in the trading chat, I set up this markup right here, 61.8, headed back down, went back up, retested, and then dropped. So if you checked our Life Partizan trading chat, you would have seen the sell on AUD USD. And I think AUD USD is going to continue to go down. So technically with AUD USD, we are in a downtrend. Overall, on the yearly chart and monthly chart, we're in an uptrend. But for right now, we're going to look for selling positions on Australian dollar, US dollar. So I would not be looking for a very big buying bias on this yet. I would be looking more for a shorting bias. I would be looking for a buying opportunities if it hit this zone right here and this zone right here. This is when I would be looking for buying opportunities. Why? And it's because it's respecting, I believe it's going to respect this trend. And I also believe that it will not create a lower low from this point right here. If there is a lower low created, then we are technically in a downtrend and we are in a shift in momentum. But it hasn't created lower lows yet, guys. Look at this. Created a high, pullback, and it even respected the last low. So technically we are still in an uptrend. All right, so trade with the trend, guys. Whether it's a lower time frame, on the higher time frame, you'll always be safer when you're trading with the trend. That's why I'm looking for what the daily is doing. Right now, supply and demand zones are so key, because you want to enter on the retest. So understand, when I break down the market to people, it's very simple. All we're looking for is what? What are we looking for? Zones where the market would tend to always come in and come out of. So let me talk about this, guys, real quick. The market is just a bunch of floors and ceilings. Think of it as a crazy person just jumping up and down and breaking ceilings and floors. That's what I like to think about when I'm trading. When I mark up the ceilings and the floors, I always like to sometimes use the line chart. And the reason being is because I can see a little bit better what's actually going on, right? The story. What is this? What is the story telling me? Think of trading like a story, or like more or less like you surfing. Waves. You got waves happening in the market all the time. You want to look at the floors and the ceilings, because what will happen? Look at how price skyrocket, head back down, break this zone, come back up to this zone, and tap this zone so many times. Tap this area 1, 2, 3, 4, 5, 6, 7, 8. 8 things. That tells you something, that this is a very, very strong zone. And you can mark up the strongest zones that you have in the market, right? And you can tell every single time
Yeah, it's
that
not.
the market will tend to what? It'll tend to retest before there's a major breakout. So what I like to also mark up with the zones is the areas, because price doesn't head back just to a certain area. It'll head back to, head back to an exact price. It'll head to that zone or that area. So look at this. Look at the zones. That's essentially what it is that we're going to be looking for. The zones. And this is just more personal preference, guys, with colors and stuff, but you can kind of experiment the way that it help you out with when you're looking at it in your point of view or your eye. Go. Very simple, right? Now what I'm going to talk about is entries. Remember what I said? Market is waves, right? It'll tend to move. Right? Break a ceiling. Once it breaks a ceiling, it'll always what? A major zone. It'll always retest. Go up. Find the next level of resistance, but there's no resistance here. It'll find a newer ceiling. Break through that ceiling. This one broke through that ceiling. There was some obviously support here, guys, right? Resistance here from this zone, but it even broke that one. Huge news. Once it breaks an even higher ceiling, what's going to happen? It's just going to create an even more bigger retest. The retest right around the zone, create an even higher high. See how it was respected right here? It would no longer break after this.
No.
Up until here, up until the final trend.
By trading.
So why I'm saying this, guys, and why you want to mark up the supply and demand zone is because these are where the charts will tend to aim towards the most, right? So understand that some traders trade solely just based off of market structure. And this has a little bit to do with market structure. I don't want to use market structure. I don't want to say market structure because it's actually patented. I'm not supposed to say market structure because it's actually illegal for me to say that. But market structure, guys, if we're trading in between a channel, something similar like this, in a valid channel, we're going to be watching market structure. And what is market structure telling us now with this pullback? Possibilities. Now I'm going to mark this up a little bit later, but to help you out with market structure, you can check that out with trends. You can check that out with channels, and you could also check that out with supply and demand zones. Now there's other different confirmations you're going to want to look for. First thing I'm going to be doing looking for is, let me delete this right here. And this is why I pulled up this, this right here is candlesticks. Candlesticks play such a huge role in the market, right? Because it's telling you whether there's resistance or support or the bigger story behind the market. Look at these type of candlesticks right here, higher. The bears tried to take control. If you study this candlestick right here, this was a news event. Let's look at this one right here. I like this one. This bearish, let's change the color on this to blue. Look at this candlestick. This one right here. It's the one we're going to look at. This candlestick right here moved close to about 69 to, let's say 100 pips. But it only moved 20 pips. It opened at this price at 0.70 and closed at Denzel Washington at 0.70. So the biggest thing we're going to look for is what's the candlestick telling us? What story is it telling us? There's a lot of resistance. And the reason being is because, right, maybe news had broken out, something had broken out, but the bears were still in control. The bears were trying to take control, but there was more resistance, there was more bulls. So this is telling us what? That it's going to be a buyer's market regardless, because the candlestick, the wicks might fool you, but the closing candle is going to tell you the full story. The wicks might fool you, but the closing candle is going to tell you the full story. So study candlesticks, guys. I think the biggest thing when it comes to studying candlesticks, from my experience, reading books on it, Naked Forex is a very good book. Helped me out ungodly. It's a $10, $15 book, but it changed my entire life, right? So candlesticks are key. Let's talk a little bit about moving averages like RSI, divergence, or standard deviation. RSI goes off of standard deviation. Obviously indicators are a big thing. Some people like them, some people hate them. I'm just a big person on one, which is just the relative strength index. I have a PDF. Devontae, you're a boss. Drop the PDF in the Life by Design IML group, dude, if you can. That would be badass. So moving averages goes off of basically standard deviation. I definitely will. Thanks, boss. Appreciate you, bro. For real. Drop it. Thanks, bro. It goes off of standard deviation, moving averages, right? That'll tell you a different story or a different picture. Learn RSI, guys. You can find information on RSI in IML Academy. You can find out information on RSI on Google. But the reason I use it is because it helps me kind of understand the momentum of the market and maybe shifts in momentum. Look at this right here. One thing I like to look for is divergence, right? And this is for a little bit more advanced traders, not necessarily newer people. But look at this part of the chart on the daily. This is what divergence is. When the market is telling you one thing, one story, and you see another in this exact time frame. See how the market's going down on RSI while the market is going up. See what that is? Why is it doing that? Retail traders are buying while the momentum and bankers are selling. It's overbought. What goes up doesn't continue to go up, must come down. Every market, guys, don't ever be afraid of missing out on a trade. There's always pullbacks. There's always retracements that you can make money on. The market's never going to go up forever. It's always going to come back down and retrace, guys. So this retracement right here could have been caught just basically looking off of the moving averages, seeing it being oversold, and seeing divergence. That's another confirmation, guys, that I like to use is divergence. When I'm going into trading, when I'm looking at the charts, and if I'm looking for a buy and a sell around a major zone, is there divergence? This right here was a major zone. Huge zone. Look at how many times the market touched the zone and respected it. Would not even break this higher high before it dropped. So I have my zones that are telling me something. I have divergence that would be telling me another thing. And I have the candlesticks that are telling me another story. This is why moving averages are so huge. And RSI, looking for divergence. Even TDI, some people like to use, can help you out. It's all preference. News. With news, I like to look at two different outlets. One is forexfactory.com. It's just a lot easier to read news. And if you don't know how to read news yet, guys, I think I have a video out there that actually explains how to read news. Some traders just trade off of news alone. You know, Thursday, tonight, we have GBP news, second estimate GBP. Actually, no, this isn't tonight. Sorry, guys, I'm tripping. This is last night. This is the night going into Friday. So tonight we have a little bit of news at 7 a.m., but the major news comes out when? Tomorrow with CAD, the Canadian dollar. So we have news coming out for the Canadian dollar right around tomorrow at 8:30 in the morning. So what this is going to do is going to affect the USD CAD and also oil. So that's actually a big thing that we want to mark up, US oil and USD CAD. Tomorrow morning at 8:30 a.m. EST time, these will be moving heavily. And what major news, guys, very simple to read. Yellow folders are low impact news, will move the market 5 to 10 pips, at all, if not at all. Orange folders will move the market anywhere from 15 to sometimes 20 pips. Red folders will move the market sometime 20 to 50. It really depends on the strength of the currency versus the lack of strength of a currency. So get familiar with this, guys. Study it. When I was just starting to trade, I would literally wait for news to hit, and I wouldn't even get into the trade. I would just watch and see how the news reacted to the market and what it would do. So understand, guys, news is going to play a huge role. It's also a very good way to protect yourself. You can't just trade technically like this and not look at news. News plays such a huge role in the market. They're all correlated together, always correlated together. But if you want to see something, I always look at what the bias is, what the community bias is. What is the community outlook? Now, this is a secret that me and Chris Derrick have that we don't even share with people, but I've been giving it to people here and they've been benefiting off of it. So, you know what? I'm just going to give away the nuggets because I really don't care. I want y'all to win. Let's look at the bias right now. The bias is a seller's biased, but it's kind of half and half for the Australian dollar, US dollar. There's about 2,815 pips for the buy, for the short, and about 1,972 pips for the buy, for the line, for the buy. So we're more or less on a shorter on a short than we are in the buy for the Australian dollar, US dollar. That's what the community is looking at. I think my bias, guys, is that it's a short for just right now. Just that's what it looks like. The candlestick, it just looks like it could break and head back and double and retest this zone right here. Right here. It looks like it'll shoot down. Just based off of my eye off the daily, it looks like it'll come back down and retest this zone before it heads back up. Or before it breaks. Retests around the zone and goes back down to respect what the market is attracted to, what its overall daily trend. This zone. Very simple. So let's look at tools. Fibonacci, harmonics, Bollinger Bands. Very simple, guys. Fibonacci. Get familiar with it. This is going to be an overview. The numbers of life, guys, right? This trade, most important numbers when you're drawing Fibonacci, bottom to top if we're looking for a seller zone, top to bottom if we're looking for a buying zone. Now, I'm not going to tell you exactly how to draw Fibonacci because every single person draws it differently. But look at this right here, guys. The market always respects these zones. This part is like Chinese to me. Okay, you want me to go explain it to you super, super simple? I'm going to explain it super simple for every person that wants to know about Fibonacci, right? Fibonacci, when you're drawing it, you're looking for basically the last major vector move in the market. Now, look at this move right here, guys. Now, let me erase all this stuff so you can get this down and you can get Fibonacci. But tonight, you'll be able to learn Fibonacci, guys. All right, let me delete a little bit of this, right? And so look at this, the last initial vector move. So if I'm a bias, let's say my bias is that I think that it's going to be a buy. I would draw my Fibonacci tool from the last low to the high, the last high to the low, or low to the high. So look at this right here. You see this initial vector move. This is the initial move. then what? There was a retrace. If I'm looking for a retracement, I'm going to look for Fibonacci. And I'm going to draw Fibonacci off of this last initial vector move to see where this next move, let's say this didn't exist. Let's say this part right here did not exist. It's not on the chart. This part does not exist. Not on the chart. Non-existent. We're right here. I know it's going to go down and I know it's going to retrace. I'm going to see and I'm going to try to predict where I believe the retracement would head towards. Right? Now I would draw it from the last high to the low of the market. Right? High to the low. Sometimes people like to use wicks. Sometimes they don't. I like to kind of more or less formulate it towards a nice particular zone or area. You can experiment with Fibonacci all you want, but I think that when you're drawing it out, a nice high to the low is a pretty decent place to draw it out, right? From the high to the low. Perfect, right? And you'll see that the market, when it does its pullbacks, it'll always look for what? These numbers, these three numbers that are probably super key. The 38.2, the 61.8, and the 50%. Now, let's say this is a buyer's market. If it's a buyer's market and it hits the 61.8, it means that it's a slower moving trend. If it is a rapid buyer's market and it hits the 38.2 and starts to retrace and go back up, that means we're on a strong bullish trend. It's going to continue to go up super strong. It means that we're looking for buy orders. We're not looking for retracements or anything. Now, if it's a slower moving trend like this, and it hits the 61.8, also around what? Look at this. Look at this, guys. This confluence here. This is a support and resistance zone. It's a support and resistance zone, and it hit the 61.8. I love the 61.8 because you're guaranteed when the market hits the 61.8 Fibonacci retracement in essential pattern, just from my experience, 15 to 20, sometimes even 30 pips. That's all you're looking for, guys. This is why I'm such a big Fibonacci trader, because if it hits the Fibonacci zone, I'm guaranteed, at least from this side, a buy, whether I'm buying, I'm looking for the buy. I'm guaranteed an additional 20 to 30 pips, 100%. And this thing gave us more. So my prediction would be once it hits the 61.8, I'm looking for a buy order right here. You see what I'm saying? So let's say I'm looking for sell orders. And this is what I actually taught to I think I was in Washington, and I was teaching the Washington team this right here when I was doing the trading training, because I was talking about Fibonacci. Okay, so this is for the buy order. Let's say I believe that Australian dollar, US dollar is going to be a sell. And you can experiment, go overlapping this with multiple different time frames, multiple different types of trends, etc. We draw the Fibonacci from the high to the low, and then we saw that the market did what? It retraced. It pulled back, and what? It hit this zone right here. When the 61.8 tapped off of it and stopped right here. I remember calling this out last week on Sunday. We were right here on Sunday. I think I remember, I don't know if Cruiser's on this call or not. We were right here on Sunday. Everybody's like, yo, what is it going to do? What is it going to do? I remember I said, it's going to pull up right here. We're going to look for short orders right here for a buy. We're going to look for it to go up a little bit right here. And short orders means a sell. So we were going to look for this. You're going to look for it to go up, retrace a little bit, probably. I guarantee you guys, if I go on the lower time frame and look at this hit the 61.8 retracement and then shot down. I told them we're going to look for pending orders right here, and we're going to sell this shit and have it go down. And it shot down over 40, 50 pips. So the reason being is because what did it do? It hit the 61.8 retracement level right here. The 61.8 and the 38.2 are the most incredible numbers in Fibonacci. And I'm a huge 61.8 trader. So if a chart is hitting the 61.8, it has supply and demand zones. There's divergence that's telling me that divergence is telling me another thing. Look at this right here, guys. If you look at this right here, there's divergence. A little bit of divergence right here. There was still divergence if we're still in a downtrend around a supply and demand zone right? If we're looking at fundamentals and it matches our harmonics, there's like 5 confirmations to go into that trend, to go into that trade. 5 is all I need. Why would I not take that? Right? So this is how I figure things out. This is just a little bit about how I figure things out. So what Swipe Trades does, guys, let's say if I was a swipe trader, and I don't think I would ever be a swipe trader just because I don't want to be a swipe trader. I think that would be a little bit too much. I like to risk my money, not other people's money. But if I was a swipe trader, this is what Swipe Trader says. Swipe Trade says this. Swipe Trade says, guys, we're going to put let's say this is a pending order. This is the blue pending order. Guys, somebody's going to call this out. I guarantee you guys, within the next week or so when the Australian dollar, US dollar goes around this zone right here. Swipe Trade says this. Let's say it's looking for a buy. Swipe Trade says, guys, we're going to put a buy limit at 0.77710, where our stop loss is going to be right here. Let's say 30 pips below. And our take profit, our first take profit would be right here. And right here. The 0.788444. So basically what happens is, let's say the market shoots down here. Swipe Trade says this. The market's going to hit this zone. We're going to look for a buy. Our stop loss is going to be here to protect it, just in case it heads any more downwards. And then we're going to look for buying opportunities. And how Swipe Traders figures out where our take profits will be is it simply uses Fibonacci. It uses the 23.6, 38.2, and sometimes the 61.8 as the third take profit. Insane, guys. Literally absolutely insane. I could see this potentially. I don't even want to get into this because y'all would I don't want to confuse anybody here, but this is like a harmonic that's occurring. I could see that play out. I could definitely see that play out. But like I said, we're looking for shorting positions with the AUD USD. But that's what Swipe Trades does, guys. And what we teach here when you're getting involved with Swipe Trades is once you're in profit, once let's say this trade executes and you're 20, 30 pips in profit, guys, right before it hits your first take profit, move your stop losses, stop profits. That way you could always win a trade, right? Let's say the trade, sometimes this happens in Swipe Trades, it'll be 20, 30 pips in profit, then go back down and hit people's stop loss and people are pissed. But if you leave and you move your stop loss to break even, right, or 5 pips in profit, you'll always leave in profit. You will never leave with a losing freaking trade. Never. Guys, this is how Chris flipped his account. This is how a lot of other people flip their accounts. It's off of stop profits because the normal person can't help themselves to be greedy. So use stop profits. It's so key. That's your confirmations, guys. Let this be like a confirmation checklist, what you're looking for when you're going into trades. And the last and final thing, guys, that I want to talk about tonight on the call, since we've been on here for almost an hour. Sheesh. I appreciate all you guys that are actually on here because it shows me how much you guys actually care and how much you guys want to improve in your trading strategy and your skills. So there's a lot of people on. Never let a winner turn into a loser. Logic wins, impulse kills. Never risk more than 2 to 5% of the trade. Trigger fundamentally, enter and exit technically. Right? And I'm going to send these guys to you. Right? 5, always pair strong with weak. 6, being right is one thing, but being early simply means that you were wrong. Number 7, know the difference between scaling in and adding to a loser. So this is understanding shift and momentum. Number 8, what is mathematically optimal is psychologically impossible. 9, risk can be predetermined, but reward is unpredictable. 10, no excuses ever. I want to thank you guys for hopping on this call today. Really do appreciate every single one of you guys. You guys are like literally like my family. I love you guys to death. Let's make some money in the markets. Please use this as a guideline. I'm going to actually upload this on the Life by Design IMO group for every person to use for Fast Start for trading, for a Fast Start trading training to help the average person win. But literally, guys, this is like a lot of my strategy all in one piece. There's a couple things here and there I didn't give in depth, but it's going to help you guys out the most. Like, I wish I had one of these when I first started. So thank you guys for hopping on. I want to appreciate every single one of you guys, and I'll talk to you guys soon. Peace. Guys, drop fire emojis in the LBD trading or Life by Design IMO group. Appreciate you guys. Share your support. Thank you.